What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at NGA, that's Northern Genesis Acquisition Company. They are merging with Lion Electric. I've had a lot of people ask me about it, so I wanted to jump on and give you my thoughts and kind of where I see it going. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel for me. It was my golden birthday yesterday, 28th on the 28th. So, give me a birthday present, subscribe for me, and hit that bell so you get notified every time I post. I try to post every day, sometimes I miss, but with any growth stocks or penny stocks or anything I think can help us, grow our portfolios. There's also a link down in the description to my Patreon account. Come join the family over there. I'd love to have you. I did the first 50 patrons for just $1. It filled up super quick. I think we've got about 8 spots left. When you come over, you'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along with that. Anytime I enter a crypto trade or a swing trade or I have a watch list, I send that out so you can follow along. So if that's something you're interested in, if you want to be a part of the Day One squad and be in the family and help us grow the channel, come join us. We would love to have you. But guys, let's jump in. Obviously there is a unbelievable amount of, electric vehicle companies out there, whether it be electrification or whether it be OEMs like, NIO, Tesla. You guys know that I love Get Capital 3, the Lightning E-Motors merger. I made multiple videos about that stock. It's one of my biggest positions, and I think it's going to do very well. But I wanted to jump on and kind of give you my thoughts about Lion Electric. I do think that this is one that is looking pretty good. Initially, when I first looked at it a few months back, I wasn't super pumped on it, but I also didn't do a real deep dive. I kind of got pretty set on Lightning E-Motors. They do a little bit of different stuff. It's not like they do the exact same thing. Let's jump in. What we'll do is we'll take a look at their website. We'll take a look at their investor presentation. It is a little bit old, but we'll hit on the key points, and then we'll take a look at some numbers, and we'll look at the chart, and we'll wrap it up. So let's jump in. So this is their website, guys. So as of right now, they have these products right here. So they've got the Lion 6 and through the Lion 8, the Lion C, Lion A, Lion D, and Lion M. So they've got 7 products total. So they're not just an electrification company. They actually design, manufacture, and distribute, electric vehicles. I think they actually have, let's see. So it says the Lion Electric Co. is an innovative manufacturer of zero-emission vehicles. We think, design, and manufacture all-electric school buses, minibuses for special needs or urban transit, as well as urban trucks. Lion positions itself as a leading OEM in transportation electrification in North America. We design, manufacture, and assemble all components of our vehicles, chassis, battery packs, cabin, and powertrain. Always actively seeking new technologies, Lion vehicles have unique features that are specifically adapted to its users and their everyday needs. We believe that transitioning to an all-electric vehicle will lead to a major improvement in our society, environment, and overall quality of life. Guys, I do like, the company overall as far as face value. I like the logo, I like the brand, I like the website. I'm a web designer, so I like the look of the website, and I like the products. I think they actually look pretty cool. I mean, if I was to rock a school bus, it's pretty sick. I'd probably rock it, honestly. This is, kind of their urban truck. So it's kind of like a not a delivery truck, kind of like a U-Haul is kind of like what it looks like to me. The school buses, and then the big, city transit buses, and then they also, have semis. But as you can see here, they've got a full turnkey solution. So purchasing an electric school bus is a significant investment. Lion offers a complete support service to help integrate your electric bus into your fleet. So they handle, local subsidies process, charging infrastructure, advisory service, after-sales service parts department, and then technician and driver training. So they've got a couple different services. They've got Lion Energy, which is the EV charging infrastructure. They've got Lion Beat, which is the EV telematics system, so their software. They've also got Lion Grant, which is the funding opportunities. So obviously, when you're a business owner or you own a company and you're trying to electrify your entire fleet, hundreds of vehicles in some cases, it can get really expensive. So funding helps out with that. And then they've got the parts and the service. I did want to jump on and take a look at the newsroom, some of the more recent things that has happened with the company, because the investor presentation we're looking at is pretty old. Like, I want to say it was either back in like November or the end of 2020, but we can kind of get an idea of some updates. So they just had approval for the combination, the merger, so we should see the ticker symbol change in the coming weeks, depending on how everything goes with the SEC and everything and the warrants. I believe that they're all good on that and caught up. They did do it says IKEA Canada partners with second closest and Lion Electric for last mile delivery in Greater Montreal, Toronto, and Vancouver markets. So nice partnership there. And then right here it says Lion Electric secures its largest truck order to date with 100 zero-emission trucks from Pride Group Enterprises. So, guys, they're getting orders. That's good to see. A lot of these SPACs, like I've said before, pre-revenue, don't even have vehicles out there on the road. I never got into the Workhorse deal. I was always super, skittish on that one. Skeptical. I mean, I want to say at one point they had like 5 vehicles, that they were building out of their garage. I don't know. I felt like everything was riding on that USPS contract, and they didn't end up getting it. And I'm not saying they're a bad company, but that's the reason why I didn't ever own it. Let's see here. So this is one thing that I think is very cool. The Lion Electric announces the construction of its battery manufacturing plant and innovative center in Quebec. I'm pretty sure they're breaking ground on it here in 2020, and it'll be fully operational in 2023. That's huge, guys. Anytime that they can, bring batteries or anything like that's crucial to their supply chain in-house, that's fantastic. They also had a deal with the LA School District, but you can check on that. So let's jump in. So right here, this is kind of their mission. It says, be the leader in design, manufacturing, and distribution of all electric, medium, and heavy-duty urban vehicles. The 2024 vision is very bold, guys. I mean, it's 20,000 annual vehicle sales. That's a lot of vehicles to be sold. Vehicle cost reduction. This is one thing I like. It's the EV market is fiercely competitive. Again, it's expensive to electrify your entire fleet as a business owner, even with all of the government subsidies and grant programs and things like that. So if they can get their costs down by 50% by 2024, that would be a very competitive edge there. This right here is a little, 3.5 billion by 2024. That's a massive jump in revenue there. I've talked before about having excessive guidance. If companies miss on that excessive guidance, that's going to be bad for the share price. Now they may be able to do it. I don't know. I did take a look at like BYD's financials. They're doing incredible amounts of revenue. They're an OEM. I even looked at Bluebird. I'm actually going to do a video on Bluebird. They were doing over $1 billion, but 3.5 is a lot. Now, with Biden wanting to electrify the entire 500,000 school buses, that could definitely help. I wanted to kind of show you some of the key investment highlights here. So they say they're the leading medium and heavy duty urban electric vehicle platform targeting 110 billion annual total addressable market in North America. Established EV company with real vehicles and proven technology on the road today. Guys, I love Lightning e-motors. But these guys are a little different. Lightning e-motors is from class 3 to class 6. These guys are class 6 and up. So it's not like it's a direct competition. So there's no conflict of interest. You know what I mean? So as of right now, as of November, they had more than 300 vehicles on the road, with 6 million miles driven. Guys, that's really not a lot. Like, if you think about it, 300 vehicles is not very many, but it's better than 5. In a lot of cases, most CCIV doesn't even have a car on the road. I know a lot of people love CCIV. I used to own it. I sold it. But guys, I like to see that they've at least got vehicles out there. That's why these SPACs have been getting hit so hard, is because they're more speculative, which is fine. I'm way down with investing in, growth companies. Don't think I'm not. So they've got 7 purpose-built electric trucks and school bus models available for purchase today, coupled with near-term product launches. So they're bringing new products on in the coming years. The manufacturing facility near Montreal, capable of producing 2,500 vehicles per year. So that's what they can do as of now. It looks like they're multi-year purchase agreements for the purchase of up to 2,500 Lion 6 and Lion 8 trucks at customers' discretion, executed in 2020. That's, always good to have a pipeline and a purchase agreement. I've been in sales my entire life. One of the biggest things is keeping your pipeline solid. You've got to have constant deals coming into your funnel. Visibility on up to 6,000 potential vehicle sales, 4,000 trucks, 2,000 buses, including from 300 plus purchase orders in hand and growing sales pipeline. Again, very good there to see that. Looks like they've got 10 years of all electric vehicle and R&D manufacturing experience provided in-house. All vehicles are purpose built. They do everything in-house. They've got the software that's 100% integrated. That looks good there. So this is good right here. So plans to develop a large-scale U.S. manufacturing facility and state-of-the-art battery R&D production plant. Well positioned to further differentiate the maintenance charging infrastructure, suitable trucking as a service, and V2G customer solutions. That's one thing I haven't said yet, guys. The V2G, I'm huge on. I did that video about Nuvei, that charging company. I think is very undervalued right now because they patented that V2G technology. The V2G is the vehicle to grid, especially when you're dealing with like these school buses and these big fleet operators that has a ton of these big vehicles just sitting, like the school may have them sitting for half the year in the summer or whatever. They can hook them all together and send electricity back into the grid and create an extra source of revenue for the company. So it helps them, get their money back faster, create an extra source of income. It actually is shown to improve battery life. Like V2G is awesome in electric vehicle industry. So let's kind of take a look here. Now, they do have some good partners for their supply chain. They've got a long-term battery supply agreement with BMW. They've got the key supplier for traditional and electrified componentry. Then they've got LG as well with the long-term battery supply agreements. And then Econ Edison for the V2G pilot program. And then ABB for the charging infrastructure partner. Guys, when they get that battery plant, that's huge. I'm real pumped on the battery plant that they say will be operational by 2023. They won't have to rely on these guys. That's huge. The key customers, it's really good to see that they've got orders from Amazon. Yeah, it may have only have been 10 trucks, which is super small, but they've got some big customers here, 30 trucks there, 50 trucks there. Lead customer for Lion 8 electric refuse truck. Guys, it plants the seed, right? Amazon orders 10 trucks. If they perform, if they like the trucks, they come back and order more. 10 trucks is nothing, but Amazon is a massive company with a massive fleet. If they can get in the door and build a relationship, that can be huge for future business. So we like to see that. Now, this right here, purpose-built for electric. Guys, I did want to show you this because this is really cool. All of their vehicles are completely designed, manufactured, and put together in their facility, and they've got the V2G ready battery. But you can see here the truck cabin, the bus body, the chassis, the battery, the powertrain. That's their facility right there. This is another thing I wanted to show you guys. So as of right now, they've got a 200,000 square foot, operating area. That's kind of their facility right now. They've got 400 employees there, and they've got an annual capacity of 2,500 vehicles a year. That's not very many, but it is enough to, supply their projected, numbers up until I think about 2022. They are looking to do another facility, like we saw in the beginning, to do 20,000 vehicles a year. But again, I like the fact that they've got the ability to do 2,500, which covers their projections up to 2022. Now, when they do expand and open up that bigger facility, obviously that drives a lot of cost. Things sometimes get pushed back. Nothing ever goes perfectly. if I remember correctly, and we'll look at the numbers in just a second, their 2022 projections are pretty close to 2,500 vehicles. So that's cutting it. That's going to be big, but we'll get to that in just a second. These areas right here, these yellow ones, are where they're planning to put experience centers and R&D centers. The blue ones is where they've already got them. This right here is their current product lineup, and these are the customers that have made purchases with them already. They've got the Class 6 with Amazon, with Coors, Molson. They've got a lot of really nice customers there. And then this is the all-electric buses. Again, guys, I'm really bullish on the school bus part of it. I do like, obviously, the semis and the other stuff, but I really like the niche of the school buses. I think that gives them a really nice opportunity. Broadest product lineup in all electric, medium, and heavy-duty urban vehicles available for purchase and use today. Right here in this slide, it looks like they said that they've got Lion has a significant first-mover advantage to drive growth. So in 2020, they had all of these vehicles, available. The only ones that had it as well was Bluebird and BYD. Nikola, Rivian, Tesla, Arrival. I guess none of them will have their vehicles on the road until 2021. I didn't know that, which is this year. But it is nice to see that these guys have got vehicles out there available in 2020 ahead of all of the other, real heavy competitors that are coming up on the stock market. I would absolutely rather invest in this company blindly than invest in Nikola. You know what I'm saying? So, I mean, they've got competition, obviously. Tesla's a huge competitor. Rivian, solid company, and so is Arrival. But I'm liking this stock. I actually think Lion's got a lot of opportunity. The next thing I wanted to look at, guys, was the battery system development plant. This is huge, guys. I mean, if you see here, they are projected to have it completely done by the end of 2022 and operational by 2023. The projected battery systems cost saving is 55%, driven by further vertical integration. That can tremendously increase, their bottom line. And then eliminating supplier dependency is another thing that's huge. Again, guys, if they're relying on all of these different companies for their supply chains, anything can happen. Chip shortage, stuff like that. If they're doing it in-house, that's huge, guys. That's huge. So then one more thing here before we get to the fundamentals, or the numbers, I should say. They've got a potential to do $300 million in EBITDA opportunity by 2024 with those, credits. So really cool there. It says resell, install, and optimize global tier 1 charging infrastructure. They've got the Lion software, so they've got use data platform and analytics from telematics software as an additional source of revenue. And then this is the other thing that I really like right here is the trucking as a service. So it's an all-in-one package of vehicle financing solutions, energy and charging services, and fleet maintenance and optimization. It's a full turnkey solution well suited for customers late to EV adoption. Guys, that is huge. The fact that these smaller companies, or any company that wants to electrify, or it gets to that point where they have to electrify, because Biden, they're wanting to electrify everything by 2030, right? If they can literally, go up to them and say, hey, we can help you electrify. We've got, from start to finish, a solution to help you with charging, to help you with funding, to help you with maintenance. That will be huge with converting those customers that may be on the fence or ones that don't quite have the means to just do it outright. So I really like to see that. Last thing we're going to take a look at here is the financials. So guys, this is the one thing that I was a little worried about. So it says they're fully funded, which is great. Typically when they come out of SPAC territory, they've got the pipe rounds and they've got funding there. That's not to say that they won't raise money in the future, especially if that share price gets way up there, especially when they're building their facility. They absolutely could raise more money. 100% of 2020 and 2022 production possible from current production facility. But look at this, guys. They're 25 vehicles off max capacity in order to hit their revenue goals by 2022. That's kind of what I was saying about those massive revenue guidance, guys. I mean, look at this. They did 110 units in 2020. they're looking to scale that to 650 by 2021. Now, that it's not like they're going from, 2,000 to 20,000. I mean, but 491% is a big number. The reason why it looks so big is I think because they're at 110 in 2020. 650 vehicles is not a lot every year. I feel like they should absolutely be able to do that. What kind of makes me nervous is right here in 2022, where they're almost at max capacity to hit their revenue guidance. They're jumping. So it looks like they did 29 million in 2020 or close to it, and then they're projected to do 204 million in 2021. 668 million in 2022, 1.6 billion in 2023, and 3.6 billion in 2024. Guys, that is massive projections there. Like, I thought Lightning eMotors was, optimistic, and they've got, a huge pipeline. They've got most of their, their revenue in projected or in like verbal contracts, or it might even be signed contracts. But, these guys, I don't think that's the case. And I mean, you can correct me down in the comments if I'm wrong, but guys, I mean, these are massive revenue guidance. Now, the one way that I think that they could potentially do this is if Biden's like, all right, we got to get every single one of these, school buses electrified. We got to electrify the fleet, and they get a lot of those contracts. Guys, I don't see this as being like the workhorse thing where it's like their entire business model, it felt like, was riding on the USPS contract. I don't feel like that's this at all. Obviously, they will get a bump every time a contract comes up, and they have a potential to get it. I do think they will get a lot of those contracts, or at least partials. But this is big guidance right here. Like, to jump this much year over year is big. I'm not saying they can't do it, but I'm just saying if they don't, the share price will feel it. It will get punished because of it. Now, they may come out here and just blow it right out of the water. Guys, obviously, I'm not an EV, manufacturer expert. I'm just saying they've got big guidance. Now, if they do hit these numbers, they will do very well. The share price will love it. I mean, it will get a huge boost. I think that they will be fine, up tier to 2022. The only thing that you worry about in situations like this is delays and, facilities not going up properly, and, nothing ever goes 100% smooth. Guys, I just want to give you the potential risks. I really like the stock. I don't currently own it, but I'm going to watch it and potentially add a position because I'm liking what I'm seeing. I mean, they've got, they've got multiple different vehicles so their revenue's diversified. They've got, I want to say they're going to be, free cash flow positive by 2023. Obviously in a new company like this, they're operating in the negative. They don't have free cash flow, but overall, guys, this 3.6 billion is a massive number. I hope they get there. I really do. It's just kind of pushing it, but we'll see. I may be totally wrong. To go from 7,000 vehicles to 18,000, almost 19,000, that's big. And, but we'll see what happens. So, let's take a look at the chart. Overall, guys, before we, look at the chart, I do want to say this. Again, I like the brand, like the stock. I'm definitely going to be watching it to take a position on it. I like it more than a lot of the other ones I've looked at. I definitely like it more than Workhorse, and I don't like it as much as Lightning eMotors, but I do like it. So let's take a look. So as you can see here, same thing as all of the other SPACs back in, December, January, February, ran clear up, and they actually hit a high of $35. Then they sold off, had some big gaps down, just like a lot of the other SPACs, but this one started selling off a little early. Most of the other SPACs didn't really start selling off until like beginning of February. This was selling off mid-January, and then it really started selling off. It started to come back up right here at the beginning of February, and then really started getting hammered. Found its mid, beginning of the March right here, kind of found its low, clear down at 1275, came up, gapped up, and then, came down, and it looks like it pretty much sustained its mid-March low. So it didn't get pushed way down past it, as far as, the price it touched. It never closed that low, but they didn't get just constantly pushed down like Skills and a lot of the other ones did. As you can see here, they're kind of holding resistance right here at this gap. Looks like they haven't been able to break above that mark right there. what we really want to see with this price is we want to see it close above that gap right there. Then it will hopefully use that gap as support and start making its way back up towards the upside. But you know, it has been making nice moves, coming down from 1390. You know, I think it hit a low of 1276 to working itself all the way back up to 1850. That's looking really nice. I mean, that's showing some nice resilience there and showing some good movement. It is even getting back underneath the moving averages, so the trend is starting to reverse, and it is hopefully starting to move up into an uptrend. But guys, again, make sure you look left. Find your support and resistance. You're probably going to run into some more resistance right there. You'll definitely run into some resistance right there. Right there. But as you go up, every time you break through, hopefully it'll start acting as support. So overall, guys, I like it. I think if you want to take a position in it, I think I would definitely wait and make sure it doesn't come back down and fill this gap first. The merger just got approved. The ticker symbol will change. They could potentially sell off because of the dilution post-merger, and it could come back down here and fill that gap. That's what I'm going to wait for, is just to kind of see what happens. Best case scenario, in my opinion, is it comes down, fills the gap, holds support right here. You get it in the 16s, and then it starts its advance again. If these guys can hit their revenue projections, I think this stock will do very, very well. I mean, with the type of revenue projections they've got, I could see this stock being a $40 to $60 stock all day long. If they can hit those projections by 2023. I think the 2023 is going to be the big one. They can do their projections from 2021 and 2022, but after they can't meet that 2,500 anymore, that's going to be the icing on the cake and the deal breaker. So we'll just have to wait and see what happens. Let me know down in the comments what you think. Again, guys, I wanted to put it on your radar and just kind of give you my thoughts on it. Obviously, I didn't do a ridiculous in-depth analysis. I just looked, and what I see, I like. I like the company overall, like the brand, and I'd love to hear your thoughts on it. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to come and join the family. Like the video if you get any value out of it. And I'll see you guys in the next one. Peace.